Welcome to the Course One podcast. In this podcast, we explore the emerging open financial system. We dive into scalability, interoperability, proof-of-stake, blockchains, and many other parts of this coming financial singularity. Tune in every Monday to dive deep into these cutting-edge projects and protocols with Course One team members and guests.
Hi, and welcome to the Course One podcast. My name is Brian Kerr, and I'm here today with another Brian, who is Brian Kerr, the CEO and co-founder of Kava. Thanks so much for joining us today, Brian.
Thanks for having me. I'm really excited to be here.
Yeah, absolutely. So we're going to talk a lot about Kava today. Kava is a super exciting new DeFi blockchain that's launching soon. But before we get into it, just a brief disclaimer. So first of all is that I'm an advisor to Kava. Been working with them in that capacity. Also, Course One is going to be one of the validators of the upcoming Kava network that's going to launch soon. So if you want to stake Kava tokens, then you'll be able to do so with us. And we're helping them with the network launch and all the things that come with that. Yeah, so I think those are the two things kind of up front. But I would say with that, let's get into the details. What's kind of your story? How did you learn about the blockchain space and how did you end up becoming involved in it?
I think I have one of the somewhat normal in crypto background stories where I was in, it's either like you're in poker or you're in gaming. I was in gaming. My co-founder was in poker, and our other technical lead, is in distributed systems. And usually people fall into one of those three categories. They either we're doing it professionally before, either in crypto or distributed systems, or it was in poker, which got hit really hard by regulations and a lot of people turned to crypto, or you're in gaming and just digitally native assets are kind of bread and butter of everyday life. So I came in from the gaming angle. I was one of the early members of an esports team called Fnatic, which we had professional gamers traveling around the world competing in tournaments. Fnatic was one of the world's first League of Legends champion. But basically that whole business operates around having a bunch of professional teams. They travel around the world competing, winning large prize pools. And then the management team runs around and does business development, getting media rights, sponsorships, selling swag, kind of like any other sports team.
Cool. That's super interesting. And so were you one of the gamers on the team, or were you the management side of that?
2006, I would call myself like a semi-pro. There wasn't a lot of money in being a professional gamer at that time. But previous to that, I was actually a marketing agency launching some AAA game titles here in San Francisco called the Kenwood Group. And it was through that I got into the esports world, which was always like my passion. I love video games, but I love competing in video games even more. So when I found a way to make that into my career, I was really happy to take the leap and go down that rabbit hole.
Cool. Awesome. And so how do you go from there to the crypto space?
It's actually thanks to another large team in the space. So Fnatic was the largest and most popular team in Europe. But then there's also another very large team that's the most popular in Russia called Navi. And the founder of Navi, Alex, actually started a crypto project. So he was into this way before me. And him and another guy, Vlad, created a project called D-Market, which was a decentralized marketplace for video game items, where, before NFTs was even a term people talked about, D-Market was there as a platform where people could buy and sell skins or in-game items that were NFTs. So that launched, I forget the timing, but it was in the ICO madness, raised about 20 million. I was an advisor to that project. And actually at that time, I was in the process of, a lot of people don't know this, but I was in the process of raising a seed fund to actually go down and become a VC. And that seed fund was going to be only for gaming. I was very committed to, giving back and helping esports and gaming entrepreneurs. And I thought, a niche focused VC was going to be really good in the upcoming years. But when I saw what D-Market was able to do, which was effectively raise $20 million in 3 weeks, starting with only a pitch deck, which is impossible in the traditional business world, I quickly realized that something was happening over in this, industry of blockchain and cryptocurrencies that was not only going to be game changing the technology side, but it was also just going to at the time I felt like it was going to shake up the VC model. So I kind of just paused what I was doing, even though I had a few millions of dollars in commitments to kick off that fund at the time. I ultimately just paused it and said, I need to look at this because this seems very, very interesting and game changing over here. So I need to decide, which one am I going to do? And after some time, I decided to go down the crypto rabbit hole and start a company here.
Cool. And so what about the Kava team? How did you come together with your co-founders and your team members? And what was the original idea that you wanted to pursue with Kava?
So I had 3 ideas or core concepts that I thought blockchain was going to really change the landscape of. One was the obvious one, payments. The second one, I thought that opening up game economies was going to be another. And then the third was actually along the lines of networking or mesh networking. And actually, there's a number of technologies that could be combined to create a faster internet using blockchain, which sounds a little counterintuitive. But I also had a brief history at like a wireless mesh network company. So I still want to pursue those ideas, but unfortunately, you have to choose your battles. And I chose the biggest one and the most prescient, which was the payment space. And I had met my co-founder, Scott, and Rory at an event, just a crypto meetup that was happening here in San Francisco. And he just happened to be traveling here. But we were just exploring. We treated this whole industry as just a big whiteboard. And we needed to talk to all the experts in the field that were already doing things and figure out where was the white space that we could build a good company in. And the first thing that we did was we flew out to Zug, which was like the hot spot at the time where all the nonprofits were starting at the Ethereum Foundation and everything. Tried to get a sense of that. And then the other thing that we did that was a little weird was we also, outside of the whole crypto landscape, we flew to a Swift conference, and for those of you who don't know, Swift is the payment system behind banks that allows them to communicate message. Because we thought payments was the core thing, we actually had an early thesis that actually building software for banks where all the money and all the capital already was much better to bring blockchain technology to that than to build a cryptocurrency from the ground up and compete with them. But anyway, we went there, interviewed a bunch of the bankers, and turns out none of them thought crypto or blockchain was very useful. It was just like good marketing stunts and PR for them to say they're launching a new incubator or trying out new XYZ, but they all hated Hyperledger. They had no reason to adopt Ripple. There was a lot of just sort of negative interest at that time because they viewed it as either it wasn't valid or it was going to eat their lunch, so they should ignore it anyway. Anyway, that's a long story that I could go into deeper, but that was sort of the start and the impetus of where we got into things. We thought we were going to build banking software, to be honest. And we ended up realizing, oh, well, all these bank systems suck. We should actually focus on interoperability because that's the core issue across crypto and banking. And at that time, then we dove really into a technology that we liked that was open source called Interledger.
Okay, so you decided to focus on interoperability, and then you worked on Interledger. So it's of course the project that's kind of been going for a long time, right? Initiated by the Ripple team initially. Mm-hmm. So what were you looking at building with Interledger?
We thought it was a really good platform philosophically, or is a good framework philosophically to connect up any two systems that were distributed ledgers, whether it's in a bank or an open source system like Bitcoin. And there wasn't a lot of focus on the open source side of things to build support for cryptocurrencies. So we actually, Scott and I, put in a bunch of money and hired up some people. And we thought, one of the main contributions we could add to the space was actually improving cross-chain settlement. So sending payments between Bitcoin and Ethereum or XRP and Bitcoin. And we did that for, I think, the past 2 years. And we were very heavy. We actually built up like a strong expertise in payment channels, built a strong expertise in cross-chain settlement. And we pushed out a few products like the Kava Switch wallet, which allowed anyone to trustlessly swap between their digital assets while retaining custody. So they could, have XRP and in the wallet say, I want to swap this for Ethereum. And that would all happen trustlessly between the parties involved. But what we realized is that product is very good for payments, and crypto as a space isn't ready. We came to the conclusion that crypto isn't ready to be on the main stage for payments just yet. I'll break it down as from the business side of things. Well, the technology is like very interesting and impactful for payments. On the business side, if you're trying to build a payments company, effectively, there's no model where you don't take a small spread of the transaction flow. And the volume for crypto right now is just so small. You would need to charge huge spreads to make it work for a company. And when we ran around and we raised some money from Ripple, from a number of like crypto VCs for our seed round, and we did some interesting things. But I think ultimately when it came time where the Series A was on the horizon, we realized that this industry at least needs 2 more years before what we were building was going to be a really good product for it. So I think like the product market fit was there, but product market timing fit not quite there yet. So we decided we needed to build something for crypto that crypto needed today. And that's where we come to what Kava's doing now.
Cool, awesome. And well, tell us about that. What is the plan now for what to build with Kava?
Yeah, so what we thought is we need to apply all this expertise that we built up in cross-chain settlement to something that we can build today. Otherwise another team should probably be building it. And that led us to, at the time, like DeFi was the only thing that during crypto winter that was really doing well. Maker had done fantastic things, building up a use case where there was quite a few users. The CDPs were growing. A ton of Ethereum had been locked up. So it was like kind of like heralded as the only thing that's surviving crypto winter. When we looked at that and we saw that DeFi was likely one of the only saving graces of crypto for the time being, it made sense to build a product for that. And we really liked the Maker model. We actually know a lot of the BitShares guys, which were the original creators of a blockchain that used CDPs, learned a lot from them about how they pegged the renminbi and pegged other fiat assets and how the CDPs have performed there. And with that, we believe that we were a bit confused why DeFi had only grown up in Ethereum. I guess it makes sense that it has the community and it's one of the only open platforms where you can build things today. But we saw no reason why we couldn't expand that to all the other digital assets going forward. So we set out to design a spec where we actually could bring a lot what we thought were very primitive DeFi services that were required to do anything else to expand crypto, such as stable coins or stable value for hedging and for leveraging. We set out to build that. And just to give you a quick backstory as well, with the impetus of where we really, really doubled down. Like we were exploring different options kind of in the December of last year timeframe. But it was through our discussions with Ripple actually, where they said, hey, we have a bunch of MSBs and they're currently transferring remittances and using our platform, but they don't want to hold XRP because the currency risk is less than ideal. It would be great if they could hold a stable value, but backed by a crypto asset like XRP. And they asked us to come up with a spec. And we put that together, and it was effectively like a Cosmos zone that operated like single collateral Maker. But instead of using ETH, it was using XRP. And once we put that spec together, we just quickly realized like, oh, wait, actually, we can use our cross-chain expertise to add way more assets than just XRP. And then we can be an open platform to give stability and the ability to leverage and hedge or receive loans to all the other blockchains that currently don't have smart contracting abilities.
Right. And so that's basically the core thing, right, that you guys are building now, which is an independent blockchain, right, built on Cosmos SDK. So, running on Tendermint and having a lot of this similar staking logic as Cosmos Hub today. But then with the CDP functionality, basically what Maker has on Ethereum, and, with sort of a multi-collateral stablecoin, and then pegging or kind of connecting with various different chains so you can get the assets onto those.
Mm-hmm. Yeah, that's right.
Cool. Maybe let's start on the asset aspect. So of course you have to get the assets onto that. You have to get XRP onto that, and presumably at some point you'll want to get Bitcoin onto that and other types of assets. So how do you see that happening?
Yeah, I think a lot of people, they hear, oh, cross-chain, lending platform or stable coins, that sounds great. But then they don't realize that you actually have to move or peg an asset from one blockchain, effectively put it in escrow and create a representation on your whatever blockchain you're trying to move it to, where it has that functionality or the contracting or the in this case, a module that enables the user to do all these things. And to answer your question, like how do you do this? It's really different per blockchain. For any Cosmos blockchain, we actually can use something because we're built on the Cosmos SDK. We can use IBC as it rolls out, and it really makes our job very easy. Assets can very freely move from whatever blockchain they're on to ours and be used in the CDPs. The only requirement would be that our governance group votes to adopt that asset. But in many cases, we have to build a custom bridge or a custom pegging mechanism. So in XRP's case, we have to build a system where the user in the CDP portal would need to send XRP to an address that's effectively like a multi-sig controlled by all the validators of our blockchain. And in that way, then all the validators can see that they're in control of it, and they can create an XRP representation or XRP token on the Kava blockchain and give that to the user to then use in the CDP platform itself. And then when they want to withdraw, that token is burned, and then the validators then send back that XRP to whatever destination it needs to go to on the XRP's blockchain.
Cool. And so, of course, IBC is something that's very actively being developed by, All in Bits and Agoric and some other teams. When it comes to other connections, are you guys, like, for example, developing the Ripple one, or are you working on some other pegs to build those yourselves?
Yes. So I'll start with currently we're a very small team, and we have to be very selective with what we work on. I get messages from all sorts of blockchains that are in the top 20 saying, hey, we'd love if your asset could be used in the Kava CDPs. And it's like, I would too. I would really love that. But unfortunately, we can't build those bridges. We can work on maybe one or two, but right now we're really just focused on launching the Kava blockchain itself, getting the DAO and the mechanism of delegation and voting and everything that's associated with that working out into the world, and then launching the CDP platform itself, which is a phase 2, and making sure that works. And for us, the natural first assets are things like Atom or BNB, which already exist within the Cosmos ecosystem. And to some extent, like BTCB, which is a pegged version of BTC on the Binance DEX. So those are the low-hanging fruit that through IBC or even through a custom bridge, which we've been discussing with Binance and working with them, their team as a backup option if IBC takes a bit longer. Doing that seems like the first places that we'll go. And then once that looks like it's working and it's proving out to have use and be effective, then we can think about expanding assets into blockchains that exist outside that ecosystem. So things like XRP. XRP, though, should be quite easy because it has fast finality and it operates in many ways like a Cosmos zone, and it has like a validator set and everything as well. So I think one of the options, and actually I was discussing this with the Ripple team at the X Spring event that happened in Berkeley last week, which was we could either build the bridge ourselves, our team gets together with their team, does it in like a hackathon fashion and just tries to crank it out as fast as we can, or we can incentivize external teams to build that as well. So I think one of the things that we want to do going forward is put out like a grants program for any custom bridges to assets that a good amount of users that have a good amount of users and they're like high quality assets.
Cool. That's awesome. Well, I would say, so, we've mentioned Maker, right? We've mentioned the CDP, and probably most people listening to this, they're sort of vaguely familiar with Maker and they've heard of it. Mm-hmm. But Maker is a pretty complex system. So maybe it would be good to talk through a little bit how it works and what the kind of user flow looks like of somebody wanting to use the Kava system. Like, what steps do they go through? Yeah,
so let's start with use cases, because it is a very complex system that's trying to do something very simple. So the use case is either I'm a crypto asset or any asset holder, and I want to get a loan based on my assets that I hold. Or the second use case is I'm a person who sees that there's a bunch of volatility in an asset I already hold, and I want to get stability. So in those two use cases, you can use a CDP system to either receive a loan, which can be freely used for anything. And in many cases, that's used for either making a payment or leverage. But that's typically for people who are long their assets. And for anyone who's short their assets, they fall in the hedging use case. And since we're talking about decentralized systems, we always need to compare them to, what's the alternative on a centralized system? So the idea would be a trader or investor who has one of these use cases might not have access to services. So like I'm in the US currently, and if I go onto a US exchange, if I'm not an accredited investor, I have a really hard time getting the ability to do margin trades. But with a system like Maker or a system like Kava's, I can actually use my crypto assets to get a loan and then effectively get a leveraged long position on the underlying assets. So that's one use case. And then on the other side, if I'm one of these traders or investors and I want to hedge my position, I would want to purchase a bunch of stable coins and then hold those until I believe it's safe to go back into the original crypto assets.
Okay, so basically the example, let's say I have $150 worth of ETH, I put them in the system. I can take out a loan of, let's say $75, so it's like twice collateralized, and then I can buy more ETH with that, right? And now I basically have a sort of 1.5x leverage.
And what you can do with that ETH is actually get a loan on that and then buy more ETH. And you can do that effectively, usually up to around 3x leverage if you're really trying to maximize how much leverage you have. And I think for most traders and most positions that people try to take, 3x leverage is kind of at the upper limits. Like most margin accounts for stock trades for the average retail user is around 2.5. It's like 2 to 2.5. Right. So it addresses that, but it's definitely not your 100x leverage, BitMEX trade. It's a very different value proposition, I think, and also different user who wants that.
Yeah. Although I guess the challenge is if you go to the max, then if it moves against you, you immediately get liquidated. No, on all of them.
So they're all ratably. So it's, in the case of like what you mentioned with ETH, all the ETH would be pegged at the same price, and they would all be over collateralized to some degree. And it's only when they reach the debt to collateral ratios that they would really need to be sold off. And it's dependent per asset on what that debt to collateral ratio is. Yeah. So because they're all the same underlying asset, your risk isn't multiplied. Although it does feel like you're just creating more and more risk, but you're just putting more assets at stake effectively.
Okay. One thing I'm curious, so there's a lot of talk right on Maker about multi-collateral DAI, which is coming soon. Will it be possible for me to, in Kava, to, for example, put in $50 worth of asset A, let's say Atoms, and then $50 worth of BNB, jointly, and I take out a single loan against both of those together?
So how we've designed our system to be multi-collateral from the start. And this is actually, your question is what we get quite a lot. And the simplest form of what we're building is to have individual CDPs with different debt to collateral ratios for each asset. So if a user, functionality wise, a different CDP is created for each asset because they have different price feeds. We don't try to take a blended price feed between those assets and create a single sort of non-fungible CDP with everything else. Everything's creating the same stablecoin, but they're individual CDPs with different rule sets based on their underlying assets. But what's possible is, from the user flow perspective, a user can do that and they can have that experience, but it needs to be built as a layer on top of the protocol or the platform itself.
Yeah, because I guess the blended thing would be nice, because in a way, if the two assets then move in, if they're not perfectly correlated, in a way you're sort of diversifying and reducing your risk a little bit.
Yeah, I mean, that's how people do it on other platforms now. And the sucky part is they have to do it manually. They have to individually make up all these different CDPs to then create their, whatever portfolio and risk profile they're really after. And I think that can all be obscured away in a nice user interface. Some company is going to build that and it'll be nice for everyone. But, just to take that a step further, I actually think the CDP platform experience is not a good user experience overall. I think what the real use case, as I was talking about earlier, is for investors and traders who are trying to leverage or hedge their positions. You don't want them interfacing a platform like this what you want them to be on is on their native platform already. So in a wallet or on an exchange, and allow the experience for, I want to get a stable coin or I want to leverage up my BTC position. That should all be like a single click and a slider for how much leverage you want, or a single click for stability integrated directly in those applications. So I think that's probably the future of where we're going. But there's a few layers in between that need to be built first.
Yeah. Do you think it will make any sense for something like Kava to be integrated into a centralized exchange, or do you see that that kind of integration primarily making sense in the case of non-custodial wallet or a decentralized exchange?
So it definitely makes sense with the non-custodial wallets and decentralized exchanges, and especially if those decentralized exchanges aren't offering leverage, right? Like that just seems like a great experience if I can go on the Binance DEX and say, I want to do a 3x margin trade on a new asset. I have some BTC, I want to swap it into, let's say, BNB in this case, and I want to do that with 3x leverage. And it's just a single click, I slide, and it just gets the loan from the Kava blockchain on its own. That just seems like a great experience that isn't offered today. And also, by the way, on that user flow, they don't need to have KYC anywhere within the DEX to integrate with the Kava blockchain. It's all open access things, right? But then on the centralized platform side, I think centralized wallets could probably get away with it, but exchanges themselves, they should probably want to offer margin trading on their own. It would be more effective. They could capture more of the spread. However, if it's a US exchange or somewhere that doesn't have margin trading, or they don't want to take that risk on their own balance sheet for whatever reason, then an integration could also make sense.
Okay, cool. So there is also, of course, the Kava token, right? And I guess the Kava token is a little bit similar to like MKR, right, in the maker system. But with it being its own blockchain, I guess there are differences too. So can you talk a little bit about what the Kava token is and what it's used for?
Yeah, so while our systems are very similar and they have a two-token system, one being a governance token on the maker side, where they do voting, and it's not currently used in the single collateral case so much, but it will be in the multi-collateral case. And then the stablecoin DAI. In our case, we have Kava, which is importantly not just a governance token that users receive dividends from, but it's a governance and staking token. So it's really core to the security of our network. Everyone who's holding the Kava token is participating in securing the network and voting. They have a responsibility to vote on the key parameters. And when I say key parameters, I mean like number of validators, types of collateral supported, debt to collateral ratios, basically evaluating if assets are too risky or not. There's many things that come into governing a system like this. So I would just say that like the participation level, while it is just in a few people in the maker case, I think with Kava, we're expecting it to be a much wider audience that's participating in governance, just because the responsibilities of the token are much stronger here.
Yeah, totally. I mean, I think that's one of the exciting things that we've seen in Cosmos too, is, people are much more engaged with those systems because there's more to do, and you can stake and you can participate in governance and do all of those things.
Yeah, absolutely. And just going into the Kava token a little bit more, the Kava token is both inflationary and deflationary, which was an interesting thing to design. But on the incentive structure for validators and also incentive structure to secure the network, we have inflationary-based rewards. So anyone who's taking the asset off the network and putting it onto an exchange and trading with it, they actually get like a tax on their speculation, where anyone who's actively securing the network and having it staked and locked up, they're receiving kind of the benefit of inflation. So they're receiving all the rewards from that. But then on the deflationary side, the users of the CDP platform pay, similar in Maker where they have stability fees, they'll pay fees when they close out the CDPs on our system. And those fees are paid in the Kava token. And when they're paid, they're burned, effectively reducing the total supply of Kava. And for a lot of people, I would say it's not completely obvious, but this is actually a huge difference between what can be possible in this case versus in the single collateral case of, kind of the first version of Maker. Because in the first version of that type of CDP system, the governance group only has like one lever to pull to help influence demand of like MKR or DAI. And that's the stability fee, right? So it's very hard for them to maintain both the stability peg, but also demand for the DAI token itself, because they only have this one lever to pull. And we saw stability fees kind of go through the roof last year. And it's because they're like a central bank with just an interest rate. They don't have, all the other levers that a central bank normally would have to influence monetary policy. But here, because we're multi-collateral from the start and we have both inflationary and deflationary mechanisms, we have quite a few levers to pull, so we can adjust based on a number of different kind of complex system factors that would be at play with Kava.
So, that I think that gets us to sort of an interesting question, right? So Maker is, there's a lot of mind share around Maker. It's, the most successful Ethereum projects in some ways, many well-known investors. How do you guys look at competing with Maker?
I think that's a great question that I get a lot. And I would say conceptually, what we're trying to accomplish is roughly the same as Maker, right? The use cases for decentralized hedging and leverage are there, but building on Ethereum versus building on Cosmos, for example, are just two completely different animals. We did a lot of development on Ethereum, and it's a really tough place. And what Maker did is absolutely fantastic. But as a team that was kind of on like the bleeding edge of interoperability for a long time, I would also say building on Ethereum is very limited. Currently, just as an example, to get outside assets into Maker, they're relying on things like wrapped BTC, which is essentially like a centralized gateway. There are some hopes for that ecosystem to get something like BTC with like TBTC, but that's yet to be launched. And, I think would even be better if it was built on Cosmos. And I think their team is actually considering doing something on Cosmos as well, which I'm very excited to see how that progresses. But with the Maker system and versus something like Kava, I think what we're really competing for is not the big user base of Ethereum. I think Maker already owns that market, and we don't really have any intention to touch that today. What we're really trying to do is enable all the communities, all the crypto networks that have a very high quality asset with a lot of users, but currently no smart contracting capabilities. So things like your Bitcoin, your Binance with BNB, and any other Binance DEX asset, things like XRP, even Atom, all of these don't have the contracting capabilities to have a CDP system like this, and Kava can come in and really provide that. And I think what's really powerful about the Cosmos SDK is not only do we get a lot of this interoperability very cheap, but we'll be upgrading our system with any new features that come out for the SDK as they're rolled out. Any open source module that's built that we think is useful for Kava, we can just quickly port over because we're keeping feature parity with the SDK at all time. I think we're the only project to do that, by the way. And we had a big launch last night, and Lynn, the coffee kick in. So what I was saying was we have feature parity. We're doing interoperability. We get a lot of that kind of as a nice bonus package of building stuff on the SDK. But also, which is a stark contrast to Maker, is we have this amazing validator group that has economic incentive to help build bridges over. Not only will they increase use of the platform by building a bridge to a new asset, but they have a really nice economic incentive with all their current assets that they hold, not to shortchange that peg. Like to peg over BTC onto a blockchain, the users of that blockchain effectively have control of the private keys of that BTC or of that XRP. And they have a huge incentive to take that and run if that honeypot gets too big. But with us, we have this validator group that's validating across many different chains. And not only is there capital, but their reputation is on the line to behave well. Like you guys yourselves validate across many blockchains. And it's like we have a number of really high quality validators like that. They're managing way more capital than the Kava blockchain will ever be worth potentially, because it'll just be more blockchains than ourselves. And with that, there's a good economic incentive to be good actors for any bridges or pegs into the Kava blockchain.
Yeah, no, totally. Well, so you guys also have, kind of like a partnership with Binance. Can you talk a little bit about what that looks like?
Yeah, so We are launching on the Binance Launchpad. We had that launch last night at about 3 a.m. my time, which was fun. I'm very excited to be launching with them. Not only is it a great place where all of our core users, I think, are with traders and investors, but it is, well, they are the creators of one of the most liquid assets, BNB, and they are the creators of the Binance DEX, which we have many great use cases to extend the Kava DeFi platform to. So for BNB, it's an amazing collateral that we plan to bring in. It's also built on the Cosmos SDK, so we can do that early. But then also the DEX itself is where, while the volume is very small today, we think it's one of the best homes to move our stablecoin that the CDPs are producing, USDX, to be used as one of the major trading pairs on the Binance DEX. And in addition, the bridge there with any of the Binance chain assets, as our validator group votes in and votes for support of those assets, we can expand quickly into anything that's currently living on the Binance chain. And the thing that's most appealing to me is actually their pegged BTC. So on their centralized exchange, they allow users to trade BTC for BTCB, which is their pegged Binance version of BTC, but that's usable on their DEX. So any assets that are on their DEX, then we can bridge over to our CDP system so people can actually get leverage on their pegged BTC.
Cool, fantastic. And so, yeah, the Binance IO, right, is gonna happen soon. So we will put a link to that also in the episode notes if you want to check out, learn more about that. Actually this week as this is coming out.
So sorry, I'll just add that we've been, since we're a small team, kind of content constrained and we haven't been producing a lot, but the Binance team did produce a really good research report on our project, which is, I think, maybe one of the best places to learn about Kava in depth. So that's a good resource.
Yeah, absolutely. So we'll link to that as well. Maybe final thing before we wrap up, can you talk a little bit about, what are the other main milestones that are coming up? When is kind of mainnet launch? When is the activation of CDP happening? Maybe different connections to other chains? Like, what does the roadmap look?
Yeah, so we were expecting to launch our mainnet about a month ago, but we wanted to implement vesting accounts to make sure that all the on-chain vesting, basically all the vesting, was not just us manually controlling tokens and doling them out monthly. So we created vesting accounts that were based on things like validation. So a validator could vest based on their participation in a network. And we pushed that actually into the Cosmos SDK. That was one of the requirements. So that took a little bit longer, but it got approved last week. So where we are today is we're going to create one more testnet 3000, and we're accepting Gen TXs for that right now. And that will run for roughly like a week or two. And it's going to be testing out these new vesting accounts. But once that's done, on November 5th, we have our scheduled mainnet launch. Everything goes well with the vesting accounts and everything's good. Then the mainnet is scheduled to launch November 5th. So just in a few weeks. And then kind of following into quarter 4, we'll be releasing a beta of the CDP system. So developers will be able to use that at like Hack Atom, the DeFi event in San Francisco. And then we'll also have like a private testnet with our beta CDP system for our guys. And then moving into next year, we'll have a public testnet 4000, which will feature the beta CDP system. We'll roll out a bug bounty program for it. And we'll also have support for the first cross-chain assets integrated into the CDP system for the testnet. And these are like our conservative milestones, so things could be faster, but like publicly, this is what we're committing to. And we tend to hit most of our roadmap milestones. But anyway, going into next year, like quarter 2, we think the first cross-chain assets in the CDP system for mainnet will be readily available, and that should all be ready, which will integrate like a custodial BTC peg into it on testnet roughly around the same time. So as I said, we're starting with like Atom and BNB and other assets that are easier to bridge, with BTC being one of the harder ones. Starting quarter 2, I think we'll have some really good solutions for pegged BTC in our CDP platform for people to use. And then after that, I think it's really how things go. I don't like speculating too far into the future, but roughly those are the big milestones we're aiming for there. And if we hit those, then it's just really about expanding the platform to many more assets as fast as we can.
Cool. Well, that's super exciting. Brian, thanks so much for joining us today. Yeah, I'm really excited for Chain Launch and for, this cross-chain DeFi thing to really start working. I mean, it's also something that we've been spending tons of times on at Chorus One. The delegation voucher work that we've been doing is, of course, also super relevant, right? Because you'd be able to then move staked atoms into something like Maker, something like Kava.
Yeah, I think getting loans on staked atoms is very important, and kind of any staked asset for that matter. It's I think very important work for the whole ecosystem for that to advance further.
Yeah, absolutely. So we were working a lot on that, and of course, always one of the prime examples of a cool use case is Kava and how it could be used with you guys. So yeah, that's really exciting. Also, just a sort of final announcement. So Brian is going to stop by our Telegram group, and so that's happening on Wednesday, the 16th at 9 a.m. Pacific time, 6 p.m. European time, I guess 12 p.m. Eastern time. And, we'll just chat a little bit more, address any questions. So feel free to stop by and, sort of ask away. Yeah, I'm looking forward to that a lot. It's always been fun and super excited about Chain Launch. And yeah, thanks so much for joining us today, Brian.
Yeah, thank you so much. And, before I go, I just want to give a shout out to the amazing validator group that has helped us thus far. I think when we launched our project in June, just a few months ago, we weren't expecting the reception that we had. And now with over 100 validators on every mainnet, and a lot of them just doing great work, helping promote Kava and building software products for us, it's really enabling us to move much faster than we could otherwise. So any success that is attributed to Kava thus far, it's really our ecosystem. So I just want to give a big shout out to folks like you, Brian, and everyone else.
Cool. Thanks so much, Brian.
Thank you for listening to the Chorus One podcast. Visit chorus.one for more information about our work. Don't forget to subscribe to the podcast to stay tuned on new episodes airing every Monday.